Hello traders, I'm back again with another video. It's been a long time. It's been quite a few months. I've been busy with other things, so I've just not had time to make any videos, but here we are. We're going to do a market forecast again. Before I start, I just want to thank all the new subscribers I've had as well over the last few months. Even though I've not been putting any videos out, I've had a boatload of new subscribers join, so thank you very much. If you've not yet subscribed, please subscribe. And also, I don't seem to be getting many comments. I'd appreciate any comments. If you want me to talk about anything, I'll make a video on it. Because one of my biggest problems is I don't really know what to talk about. I feel like I'm saying the same things over and over again. So any feedback would be welcome. And don't forget to click the like button if you like it, or if you don't like it even. And tell me why you don't like the video. So right, let's get into it then. We'll start with this pound USD. We'll start on the daily chart to find the levels. I've not looked at these yet, so this is the first time I've looked at these charts today. We'll probably be looking at early next week for any trading opportunities now, week being Thursday today. So the first thing we do, as normal, I've got some lines on here already. I use FXCM for people that are just joined or subscribed. I use FXCM because I like the simplicity of it. It doesn't clutter all the chart. You've got what you need, and in my opinion you've got what you need and no more. Okay, so I've got no indicator on here whatsoever. All I've got is the candlesticks, and I've got Ichimoku. So I have got an indicator, sorry, but the only one I've got is Ichimoku at the moment. As you can see with these lines, that's what I use to trade. I also use levels and fractals. I've got the fractals on. I won't really class that fractals as an indicator though. So the first thing we do, we put some lines on our charts, and we distinguish where the support and resistance lines are, levels are. I've not made a video in a while, so I'll keep tripping up on my words. I'm not the best speaker at the best of times, but we'll plod on. Right, so we've got some levels here. I've got a red line here. That's usually what I use for my stop loss, and then I've got a green line and a blue line. Blue line's normally my entry line. Green lines normally take profit. Okay, so I've got three lines on here, but it doesn't really matter what we use here. So I'm going to just mark this level on this one. We've got an eye there, and we came back down to the low there, and now it looks like we've been up and down here ranging for quite a while. Okay, and this is the daily. Now a range on a daily is not going to be a range on a lower time frame. Okay, I don't want to get into multiple time frame analysis, but basically you need to trade your time frame. Don't focus on too many time frames, and certainly don't go up to higher time frames when you're trading the lower time frames. You could go up one time frame, but don't go up sort of two or three. I see traders trading the 4 hour and looking at the weekly and monthly and things like that. It's okay for levels, weekly and monthly, but we're not trading. It could take months and weeks to get to them levels, if you know what I mean. So I'm not gonna. Let's just have a look. I'll put this monthly on. I'll try and show you what I mean. So look, this monthly here. So we're trading here at this level. This low here is 4 candles back, so that's 4 months back. Yeah. So basically, we're not going. I'm usually looking to trade from between a few days to a few weeks. I'm not really trading for months and months on end. So basically the monthly levels here, so if I mark that monthly level just to show there and there, and then we drop down back down to the daily. Yeah, see the miles away. That one's right up there. And this one I can't even bring up. There we go. So they're the same levels. You still get the same levels, obviously, with the lower time frames. Some traders even get confused. When people, traders that are brand new, absolutely brand new to trading, they get confused. It's the same levels, but we can tweak it to the exact point. You see, if you drop down. But look how far that is away from where we're going to think about entering the trade. Now there is a trading opportunity here on this pound USD daily. On the daily time frame there's a trading opportunity, and the reason I say that is because we could enter there. I mean, it's not too late. We could enter there and trade it to the downside, and put a stop loss either above that candle. See what's happening here. I think my internet's playing up a bit. Okay, I think we're back now. So I have to just pause it there because the internet I don't know what it's doing. It seems to be making a lot of noise. So why am I saying we trade this short here? Even though we're above this cloud, we don't take Ichimoku as gospel, okay? We use it as a guide and that's all. So basically, yes, we're above the cloud, but look, we've got a TK crossover here with a TK. Sorry, we were just about to get a TK crossover here to the downside. We've made a low here, we moved up here, we moved down, okay, pulled back and moved down, and now we've pulled back again. So see this N wave, N pattern it's called. In Ichimoku Advance it's N pattern, or any pattern for that matter. Down, up, down. Okay, so we've made a high, we've pulled down, we made a low there. Okay, I'll just zoom it in a bit so you can see. So we made a high, we pulled down, even though this is bullish here, we pulled down, we blue candle high, we made a high there, and then we moved down. Okay, so it's like in an N pattern, okay, the letter N. And now we've moved up again, we've moved to this level here, yeah, I mark it, so we moved to this level, we broke just slightly above. Don't forget levels, the areas, it's not a single level, it's an area, yeah. So we moved here, we moved back up, and now there's a possibility that we can move down. And to back that up, we've got a TK cross that could be developing. See that light faint blue line and the light faint green line? That's the TK Tenkan-sen and Kijin-sen. So it could be crossing down. Okay, nothing's 100% certain, right? But we just need to put the probabilities in our favour. Nothing's certain. You will lose trades. We all lose trades. Everybody loses trades. Okay, and we will get the odd loser here and there. The idea is to put the probabilities in our favour. Okay, keep a tight stop loss. And one thing you should never do, you should always do this when you're trading. Okay, you should put your entry where you want to enter. So let's say it's there. If it was there or there, if you're entering now, right, you always want to be aiming for at least 2 times your stop loss as profit. and don't take anything less. That's what you should never do. You should not, because as soon as you start taking less, if you take less than a 1-to-1, overall you can, even if you're a 50% trader, you can be successful just winning 50% of your trades. Because if you're a 50% trader and you aim for 2-to-1, so your stop losses say 50 pips, your profit target is 100. Okay, so eventually you're gonna be profitable, even if you're only a 50% trader. We aim for a 60 to 70% probability. So the probability of this moving to the downside might be 60 to 70%. Okay, and there's news as well, don't forget, to affect the trade. So we have to keep an eye on the news. What I do is I look for the trades. If I see any opportunities, I find the opportunities, and then for that pair I'll have a look at the news. Okay, I don't look at the news first, because to me it's just a waste of time. I'll find the trading opportunity, then I'll look at the news, because things can change as well. You could look at the news before you trade, and then by the time you come to put the trade on, because it could be a few hours later or a few days later, depending on what time frame you're trading. You could look at the news first, and then by the time you put your trade on, that news could have either have been and gone, or there could be some new news developed. So I check the news as soon as I'm ready to put the trade on. And if I see any red news, I only look at red news. If I see any red news, then I adjust, what's necessary at the time. I'll either keep my stop loss tight, or I'll not enter if it looks if it's in the very near future. I'll not enter the trade if there's red news for that pair. Okay. So here we can see we came down. We made this. I'll just go through this again. We made a high there. We came down here. We made a low. We pulled back because now it's turned bearish. This at the moment. Okay. We have to presume this has turned bearish. Why? Because we broke this bear fractal here. Okay. We've not broke this low yet. These red fractals, we broke that one. So we're looking to break that one. Right? We need to continue doing what the market's done before. Yeah? So if you look at this bullish pattern here, we broke this fractal here. Yeah? We pulled back. And then we broke. So we pulled back, then we broke the fractal. So it's a 1, 2, 3. Right? 1. 1, that's the 1. 2, 3. Then we break 2. This is your 2 here. I can't write on this. So 1. We call this 1, this low. It could be a high as well. It's just the opposite. 1, 2, level 2. We pull back. This is now 3. We don't know where when this is in action, we don't know where it's going to pull back to. 3. We broke 2. As soon as we broke 2, we broke that fractal. Okay. And we made another fractal there. We pulled back again. Yeah, so 1 again. 2. We pull back. This is 3. There's no fractal mark there. But we can see that it is 3. Because we can see it in hindsight, we can see that it broke 2. Even though there's no fractal there. Okay. Don't forget the rules about fractals you need. Depending on your platform, usually it's 5 candles. Okay. But it's still a fractal, that. But it's just not marked because my settings are 5 candles. Sort of two above. And it has to break the 2. Okay, I don't want to get deep into fractals. There's plenty of stuff on the internet that explains how fractals work. So we broke 2 there, that's level 2, yeah. And then we just went straight up, and we didn't pull back at all. We didn't make any new fractals at all. We didn't pull back there at all. There's no pullback. So people that were expecting to get onto this trade, once that candle formed and that one formed, people might have been expecting it to pull back. Some people might have tried to get in here bullish, and if they did, then that's fair enough. But we usually like to try and get in at level, so it made no new level here. It just went straight up. So now we have to presume that it's going to come back down. We're only presuming that it's going to come back down. Okay? It might not. It might pull to here and then go back up. But the probability it will be in our favour, and that's what we look for. There's nothing guaranteed in this game. We're looking at the probability, and the probability is we have to do what the market's done before. Like here, this is what I was saying. These fractals, these bull fractals, got broken here, and then we've got a 1 there. This one didn't get broken. It pulled back. Some people might have been expecting for it to pull back and continue. Some people might have got in here, and then they'd have been stopped out because it made that fractal then, and it couldn't break this 2. You see? It's got to break the 2 level. So then, now it looks like we've reversed. And this is why I'm saying it could be short here. Because we've reversed. Yeah. We made a low there. There's another bear fractal there. We made a bull fractal there. My bull fractals, by the way, are blue for the high and red for the low there. Okay. You can have, some people call different fractals, bullish, bearish, Some people call them the total opposite. I call these bull and bear in that way. So that's a bear fractal. And the reason why I'm saying short is plain and simple, because we couldn't break this 2 level here. We made a lower bull fractal, which is a key sign that we just haven't got the strength to continue. Not only did we not break that 2, we made a lower bull fractal, and the third proof is that we broke this bear fractal. Well, the first thing is we didn't get past there. The second thing is we made a lower bull fractal, and the third thing is we broke this bear fractal. Okay. Well, if we're breaking bull and bear fractals, we have to continue and presume the market's going to continue to do that. If it's breaking bull fractals, we presume that it's going to continue breaking bull fractals until it does otherwise. And same with bear fractals. If it's breaking bear fractals, we enter bearish until it proves otherwise. And the odd time, like I say, we aim for 60 to 70% probability. That means 1 in 5 times it is going to go the opposite way and we'll get stopped out. That's not a problem, because we're aiming, like I say, you should always aim for at least 2. I would say for at least 2. That don't mean we're going to get 2 times the risk. It means that we aim for 2. That means we don't close the trade when we've only made half of what our stop loss was. That's how you lose. We've got a stop loss at 50 pips. New traders, they put a stop loss at 50, right? And they'll get stopped out. Sorry, they'll close the trade. Sometimes they'll get scared. We'll see a bit of movement on the lower time frames. They'll get scared, close the trade for 25 pips and be jumping about, happy because they've made a profit. Then the next trade they'll have a stop loss of 50 pips and they'll get stopped out for 50 pips. Okay? It's not rocket science, is it? We have to stay in the trade. Even if we make 25 pips, we stay in. We've got to stay in. And if it gets to 50, if we've got a 50 pip stop loss and it's at 50, we stay in. Now if it gets to 60, 70, then we look at, see if we can move our stop loss to break even, but just above break even, not right on, smack on break even, because there's a spread. So I want to be at least 10, 20 pips above the break even, so that at least we're not going to be losing any money at all if it comes back. And then, like I say, we aim for 2, and then if it gets to 2, move your stop loss a bit more, but move it, you don't move it in increments of what you feel like in terms of money. You move it, you know, according to levels. Okay, so back to I've spent 20 minutes talking about this one pair, and I like to try and keep these videos short because people just don't, looking at the YouTube stats, people just don't really hang around that long, so that's why I try and keep them short. But it's nice to explain a few bits. Hopefully it helps somebody that's new to trading. So basically we made a high there, we made a lower bull fractal there, we made the bear fractal, and we broke that bear fractal, we pulled back. Don't forget we pulled back into the area. We don't mark this as a finite sort of level. You know, if we did, we'd have broke the level. But we didn't. And there's some more clarification or strength in our decision, in my decision anyway, that we've bounced off this Tenkan-sen here. Okay, that's one of the trading signals in Ichimoku. The Tenkan-sen bounce and the Kijun-sen bounce. So we pull back, we bounce off these two. It looks like these are flattened. This last candle or two, it looks like it's flat, but it's looking like it could break. Okay, it might hang around here for quite a while. Okay, so we could enter a trade on this daily. This is, don't forget we're on the daily, and it could hang around for a few days before it moves down. Okay, then we're looking to break this level here again. Okay, so what I normally do is I'll mark the level on the daily. Right, mark the levels like we have here. So I'll mark that complete low there, and I'll drop down to the 4 hour and see if we can get an entry. Okay, so you can see this 4 hour. No need to look at the weekly or the monthly. No need to look at any lower time frames. Set as entry if we're going to enter, and leave it alone and see what happens. Okay, so that's that. We'd have to get through this level, obviously. Let's see how far that is away. So if we enter there, that's 50 pips away, that level. So if we have a stop, let me just reverse these because they're the wrong way around. Normally, I don't always colour these, they're just coloured from last time. Okay, so if we enter there, we'd have, let's see what that stop loss is. Looks like about 50. No, more. 76, 75. So we'd have to get through this at least. We don't even think about closing the trade before we get to that level. Through this level, sorry. And then if we got through that level, then we could probably move the stop loss down. So let's say that came down there and broke this level. So let's say the market's here. And then we could just probably move the stop loss to just behind the level, maybe 20 pips behind. Okay, if it broke that level and closed, and then we leave it and see what happens. and hopefully ride it down even more. So that's the pound USD. These pairs that you can see on my chart here are the main pairs that I look at. But I do, if I need to, I do drop down to these. I've got about 20 pairs here. For me, that's enough. Okay, I don't keep looking at all different pairs. So let's have a quick look at this one. This is the 4 hour. Sometimes I don't even look at the daily. If I can see what's happening on the 4 hour, I just look at that. This one looks like it's been ranging for quite a while here. Made some lows here. I'll put some lines on. Yeah. And then we'll have to see what happens here. It doesn't look like a very good opportunity at the moment on this one. Euro yen. I don't like the look of this, and I'll tell you why I don't like the look of it. There's a level here, look. It's right on that level. There's some levels here. Okay, and it made a low there, and then it sort of came back up. So it doesn't seem to know what it's doing at the moment, that one. We're under the cloud. The Tenkan-sen's above the Kijun-sen, which is opposite to what we'd be looking at anyway if we're looking short. And these fractals look a bit all over the place as well. Yeah, we made a bear fractal there, higher bear fractal, and then we made a lower bear fractal there. So it seems to be a bit all over the place. So I'd leave that one alone for the time being. Aussie New Zealand dollar. Again, bit all over the place. Doesn't seem to know what it's doing. We've got a TK cross there that's bearish. We've got a flat Kijun-sen, which is not a good sign at all. That means it's been at the same level for the last 26 periods. Just don't forget the Kijun-sen's 26 periods. So we had no movement there. It was bullish, as you can see. We've got this TK above, Tenkan-sen above Kijun-sen. Then we've got the cross, and it's doing nothing. You see all these dojis? We've got a bit of a rejection candle there, and doji. Doesn't seem to know what it's doing. It's above the cloud here. So I'd just leave that alone. After a while, you just get used to looking at these charts and seeing straight away if it's worth even looking at. Okay? Next, £1 yen. This one looks slightly better, but we made a low there and a low there. So I'll just put these lines on. The colours are not representing anything at the moment. So we made a low there. Yeah, so we made a low there. We came back, touched this level, then we tried to go down, but then it just rejected it totally. We don't know what the news was doing there. This is the 4 hour. Rejected it totally. It's come back up, and now it's just hanging around here. You see, this is what we want to see: trends, really, nice trends that are tradable. This to me is not really tradable at the moment because we've got too many candles with not much movement. We want less candles and more movement, like this here. Look, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles there, and we've got all that movement. Here we've got 5, 6, 7, 8, 9, about 15 candles there, and not much movement. Right? If you look at that from like where it went up there, about 40 pips. So what we want is less candles, more movement. Yeah, we don't want all this garbage. Down, up, down, up, down. You know, I don't know what it's doing. It's above all these it's above these Ichimoku components. It's under the cloud. which is a good thing for short, for bearish. But we've got the TK is the Tenkan Sen is above Kijun Sen, which is the opposite of what we want, and it's flat anyway. And we've got all this garbage, and we've got some dojis as well again. So we have to just have a look and see. We want it clean, basically. We want clean charts. Yeah, Aussie yen. Aussie yen. No, we made a low here, which really didn't really. Oh, it lined up with that level there, and it came down, and it tried to go back up. And we're making lower bull fractals. You see, that's not good. That's not good at all, because that's implying that it's going to move to the downside short. And with TK are close together, Tenkan Sen, Kijun Sen close together, and we're above the cloud. So it's not a good setup again. Most of the time, it'll not be a good setup. Okay, 20 pair. Looking at 20 pairs, you might get 2 or 3 pairs that have half decent setups. And when I say half decent, I mean setups that are probably going to materialise, you know, in the next day or two. If you're looking at the 4 hour, so like that pound USD one, you know, that I mean, you could probably enter that right now. Okay, but most of the time there'll be no setup, indecision, and things like that. Aussie USD. Again, we've got 5 candles here, and it's not even moved. Okay, it's virtually at the same, you know, give or take of 5 pips or whatever. It's at the same level on the H4 as it was here. Yeah, five candles back. So this would move to the downside. I'd say that it's probably going to go to the downside, just because we're under the cloud, just because we've got a lower bull fractal. We couldn't break that bull fractal, so we've got weakness, and it looks like we're just about to get a TK cross. But again, it's not a trade I'd take. I'd wait. I want more clarity than that. Okay, and we have to bear in mind this level here. If we're going to trade it short, this level here is going to be quite strong, because 1 touch, 2, 3 touches of this level. So I'm going to have to. That's going to be stronger than just a 1 level. So we've got 3 touches there. So we've got to get through that. So I wouldn't trade that one. Euro pound. Here we've got this level here. So I put these levels on. It's all about levels. Yeah. Keep having to use my opposite hand to get out of that. Right, so it's all about levels. We've got this level here. We couldn't get through 1, 2, 3 times. Sorry, we touched there, couldn't get through them 2 times. So we're going to, you know, we presume that we're going to go down to the, you know, bearish side. But the problem is we've got this level here, which we bounced off. So it touched there, just about there, and just about there. So again, not clean. We want it clean. We want everything clean. Clean trends, clean candles, that we can see what's that. We need to be able to see how the market's moving. See what is it telling us? What's the probabilities? That's the main thing. Can we read the probability of the market? We're not going to be 100%, but can we sort of get some idea? That's all we want, some idea. Just so that we're not just jumping in willy-nilly all over the place at random. You know, you jump in here, you know, It could go either way. We need to be at a level. Now this probably would have been an entry here, and the reason I'm saying that is because this is a range. We can trade ranges, because if you look at this, it touched there, it touched there, it touched there, it came down, it touched there, 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 there. So we could trade that to down, and you could trade it up to there, down, up. Okay, you've probably got stopped out on that one, because if your entry had have been there, okay, it made an indecision there, big long leg doji there, came down, it would probably stopped you out because your stop loss would have been below there. But all I'm saying is we can trade ranges. Then it would move back up. If you're trading it back to the downside as a range, we'd have probably entered there. See that? Bit of a rejection. Or if you drop down to the lower time frame, you might have been able to enter on this candle. I don't normally drop down lower than the H4, but on the H1 you might have got an entry here. Let's say we just did this one and we entered short there. The stop loss would have been there obviously, and you can see what happened. We got at least 2 to 1, and if we'd have seen it go all the way down here, we might have been tempted to move a stop loss to below that level there. Then obviously it'd have come back up and stopped you out there, but you'd have got, you know, a 2 to 1 there. See how much? 40 pips on the H4. But don't forget that it doesn't sound a lot, 40 pips, but the stop loss would have only have been about 15, 20. There you go, 19. So we got a 2 to 1 there. So even though it's only 40 pips, stop loss would have only been 20. So that's okay. And also, if it's only 20 pip stop loss, you could have doubled your lot size. Okay, got to remember that as well. Stop loss is too big, just half your lots. Your lot size. Or if it's small, you double it. So that 40 is really, you know, if you double your lot size because you've only got a 20 pip stop loss, you know, you could have, that 40 pips would have been more significant. So we can't knock it as long as the stop loss is 20. 40 is okay. Again, we're just looking at 2 to 1. That's all we're looking for. So it could move back up to this level because it's been ranging here and showing these opportunities and bouncing off these levels. We've missed the entry now. Obviously, we should have been in there, and you can see it's looks like it's moving up, and it'll probably move up to this level. Okay, then if it bounces again, we have to presume again that it's going to bounce, then we can trade it to the downside. So I think I'll call it a day there. We looked at 7 pairs. I don't want to run through all these because the video's about 38 minutes now, and we don't want it too long. So hope you enjoyed that. If you did enjoy it, click the like. If you didn't like it, say why you didn't like it. If you want to ask me any questions, if you want to make me any specific videos on anything, to explain anything, I will do. I know it's not always easy to comment, you know, it's easy, but people just don't do it, you know. It's something that people, not many percentage of people do comment, but not had many comments. I do try and reply to all the comments. If you're new to my channel, I have got a website called TradingTheProfit.com. Okay, if you visit that, there's sometimes I post trade setups on there. I'm on Facebook. I've got a Trading to Profit Facebook page. If you're interested in learning further, I've got a course on the website that you can take. And obviously I'll try and keep posting more videos on YouTube, trying to help people. Yeah, so I'll just leave it at that. If you've got any questions, pop them in the comments. Hit the subscribe if you enjoyed it, and then you'll be notified. Hit the notification button as well, and then you'll be notified if I post any more videos. I will try and post more, and also I've been really busy with a load of stuff in the house and things like that, so I had quite a bit going on. But hopefully I'll try and make more videos in the future and get back into making videos. Okay, so I'll catch you later. Bye.